प्रेजेंटेड बाय ईबिक्स कैश, हर खुशी के लिए काफी है।
Hello and welcome. You're with us here on Business Today. I'm Abha Bakaya. Here are the headlines tonight. Markets end higher amid volatility. Nifty tops 17,000. Sensex jumps nearly 300 points. Financials, IT, pharma outshine. RBL Bank plunges 18% after MD and CEO goes on leave post the RBI appointing an additional director. However, RBI allays investor fears, says RBL Bank is well capitalized, financial position satisfactory. Google files writ in Karnataka High Court against probe by Competition Commission of India, says needs more time to respond to investigation on the use of its Play Store payment system. E-commerce companies, food delivery services and cab aggregators in Delhi to be asked to switch to electric vehicles. State government sources say directions could come as early as this week. After starting on a weak note, markets made a smart comeback today. While it was a volatile session, Sensex staged an 877-point rebound, ending close to 300 points higher. Nifty also gained 82 points to end above 17,000. Buying was seen in banking, IT and pharma shares. Top gainers included Tech Mahindra, Cipla, Dr. Reddy's, UPL and Kotak Bank. The laggards included Hindalco, Britannia, ONGC, IndusInd Bank and Maruti. First up, an exclusive conversation with our market guru of the day, Hiren Ved.
Hiren, good to have you on the show. What are you expecting in the light of the recent volatility? It's going to be a sharp, short correction, or do you expect it a protracted period where money making becomes difficult?
Hi, Udayan. Hi, Abba. Thanks for having me on the show. I think, we usually, when the first leg of the bull market from the bottom gets done, you usually have some sort of volatility. It's quite possible that once this volatility subsides, we may have the headline indexes going into some sort of a consolidation move, while individual stocks may continue to do well. That's usually the next phase of the bull market, where you have probably a consolidation at an index level, but then individual stocks and sectors will do what they have to do before the Nifty catches breath and then moves on to the next level. And I think we are going to probably see something very similar. We are currently going through a transition phase where we are moving from, probably the baton is going to be handed over from excess liquidity to earnings growth. And usually that transition period is a little bit painful. So we have to go through that.
But you're sure in your mind that this is not a end of the bull run that we've seen for the last 12-15 months? Because another hypothesis could be that easy money is now over, and easy money was at the core of this bull run, and now we will probably see a different kind of a market and not the bull market that we have known for the last 15 months.
Certainly this is not the end of the bull market for sure, but it's a different phase of the bull market, right? And, I think, as I mentioned, as opposed to the first phase where it kind of lifted all boats together, I think from here on, you may see a much more measured bull market where, the broad market kind of consolidates, but you have individual sectors and companies continuing to do well. I don't think money is just kind of completely gushing out, right? It's the incremental change in liquidity that matters. Again, I'm not a global macroeconomist, but if you look at two other instances in the past, which is between May 04 and the middle of 06, when the Fed funds rate went up by almost 400 plus basis points, the Nifty actually delivered a 45% dollar positive return. And so did all other global markets as well. And similarly, closer when you look at the time frame between 2016 and 2018, when again Fed funds rate went up by about 230 odd basis points, and global markets still gave positive returns. And usually, interest rate hikes are run concomitant with a very strong global economy, right? So we will have to see what the context is, but my sense is that we're going to see a very strong rebound in the Indian economy, and I don't think that higher rates are going to kill this bull market. They may tame it for a while, but they won't kill it.
Typically, going by past instances, when you move from the first phase of the bull market to a consolidation phase, as you just outlined, if you are correct, and this is how the story plays out this time, typically how long is this period of consolidation for, where valuations pull in a little bit, pull back a little bit, and earnings growth slowly delivers and the market starts to find its feet and move up once again? What is this intervening period? I mean, generally, what is the time length?
So then I think we've seen it as low as 6 to 9 months and probably as long as 3 years, right? And there is no fixed formula what it will be this time. But my sense is that if our bet that the earnings growth is going to be quite healthy, 25% plus kind of compounding growth over the next few years, then I think the market on a forward basis is not that expensive. So my bet is that it could probably be a few quarters sideways movement before we start to move again, because then people will start looking at earnings in 23 and 24. Obviously, there can be a lot of imponderables. You can never say for sure. But I think as things stand today here, my sense is that, earnings has shown its hand. I think the way the Indian corporate sector has responded to COVID when nobody expected, we got a 20% earnings growth in 21 and potentially a 25% plus earnings growth in 22. I think we are on course for maybe a few quarters of sideways and then a move back up.
So does this then change your strategy on specific sectors or themes that perhaps you were looking at, Hiren, or were you already kind of anticipating this slowdown?
So Abha, I think, as the going goes that every bull market has a new leader, right? And I think that the bull market, which started from the lows of March 2020, already showed its hand with the IT sector or the technology sector being the clear leader amongst the larger sectors, along with certain smaller sectors like specialty chemicals and so on and so forth. And we've also seen that the leader of the prior cycle, which is the banks and the private banks and the financials, which were leading the previous bull market, are now lagging it very clearly, right? So I think that there may be new leaders who will join, but I think pretty much it looks like, in our view, that technology will continue to be in the leading seat, and it will be joined by a few other sectors which continue to deliver very strong earnings growth. Now, mind you, these sectors itself, when they are leading, doesn't mean that they don't go into a correction or a sideways movement. But very seldom does the leadership change so quickly in a bull market, right? So I think we're going to do more of the same. And along with technology, I think a sector that at least we are betting on is the consumer discretionary sector, which got significantly impacted during COVID. I think as things open up, and I know it's the wrong time to say this when Omicron is on our backs, but I think eventually this phase will also hopefully fade out in a couple of months. And I think there is a lot of recovery and earnings power that is still left there. So I think a combination of technology and consumer discretionary and a few export sectors should continue to lead the next bull market.
Watch the entire interview with Hiren Ved on Business Today IN and also on our YouTube channel. RBL Bank in focus after the stock plunged over 20% in trade today, the biggest decline since listing in 2016 after its top executive stepped down. In a surprising turn of events, Yogesh Dayal, RBI's chief general manager, was appointed to RBL's board by the central bank for 2 years. The same day, RBL Bank informed stock exchanges that its MD and CEO, Vishwaveer Ahuja, a veteran banker, has gone on leave with immediate effect. Rumours about the bank's financial health have been doing the rounds following Ahuja's sudden exit. Meanwhile, Rajiv Ahuja has been elevated as the interim managing director and CEO of the bank. The sudden development led to uncertainty among investors, leading to a drop in the bank's share price. RBI issued a statement with respect to the speculation. The central bank said RBL Bank is well capitalized and the financial position of the bank remains satisfactory, and there is no need for depositors and other stakeholders to react to speculative reports. Many were not happy with what experts say was a late response from the RBI. Brokerage firms also turned cautious after RBI's appointment. CLSA reduced its target price on the stock and said the move will lead to near-term uncertainty. ICICI Securities downgraded its rating on the stock to sell due to the sudden developments. Latest from the IPO season, HP Adhesives had a good start to its Dalal Street journey. The scrip listed on the bourses at a premium of 16%. The decent debut came after the IPO was oversubscribed by 20.96 times. The issue had witnessed a strong investor response despite high valuations. Though the stock listed with decent gains, according to experts, weaker global market sentiment impacted listing gains to a certain extent. Now, in a major bureaucratic reshuffle, senior IAS officer of the 1990 batch, Pankaj Jain, has been appointed as the new Union Petroleum Secretary. In other appointments approved today, 1987 batch IAS officer Vinny Mahajan, who till recently was Chief Secretary of Punjab, has been appointed as the Secretary of the Department of Drinking Water and Sanitation. Meanwhile, Gujarat Cadre Forest Service Officer Bharat Lal has been appointed as Secretary to the Lokpal. 5 months after new regulations for the drone industry came into effect, the centre is considering industry feedback to refine drone policy. As per sources, a meeting with officials of the Ministries of Home, Civil Aviation and Niti Aayog is scheduled in the first week of January. My colleague Karishma, who's getting us these exclusive details, joining us now. Karishma, what are we expecting from this upcoming meeting? And are there any specific requests from the industry?
Right, Abha. It was in August end that government had released the final draft rules, and this was after a lot of consultations that were made. The draft rules that were out in June were yet to be passed because of a lot of industry queries on that, and now it's the time that government is really serious about becoming the drone manufacturing hub, and for this the government is considering certain meetings. In fact, in January there's going to be a meeting with the Niti Aayog officials and Home Secretary in order to get some idea on how better could this be done. In fact, we're also picking up that Prime Minister could also inaugurate and launch a drone movement in the end of January. So this is definitely going to make the whole concept of drone ecosystem in India more simpler and adaptable. What's also coming is the big question of when will drone delivery begin. So probably in a month or so, there could be some update expected on how the government is looking to also introduce drone delivery in terms of e-commerce.
Okay. Thanks for that, Karishma. We'll keep an eye on that. Hero Enterprise Chairman Sunil Kant Munjal opens up about the Hero Group and its origins. He talks about the startup ecosystem in India and gives his view on funding instruments for new businesses. Listen in.
In your experience, as we talk about startups, and we have perhaps just about 50 unicorns currently, navigating from a controlled license Raj economy to a situation where Indian companies and families learn to interface and work with foreign partners who had access to larger amounts of capital and, of course, technology, to a situation that prevails now. Without taking names, we are now talking about Indian education company that's looking at listing at a $48 billion valuation. So imagine those numbers. Sunil, give us that sense of the span and arc of history in terms of business.
So actually, you could have asked Sanjay this question because Sanjay and his family have just done something similarly miraculous only recently. But you're right, startups as a concept is not new. Our company was a startup in the early 50s, as were many, many others, which are today standing established organizations. Just the concept of startups based heavily on technology, new knowledge, connectivity, and driven by e-commerce is a relatively new concept. Also, the amount of innovation that's going into the current ideation of the concept of these new startups, I think is very creditable. But I do, and I've said this actually multiple times, I don't think startups as a concept is new in India. It's been around for a long time. I do sometimes worry that our focus becomes excessively only on a few and only those who have achieved valuations of billions of dollars. The startups are coming up in tens of thousands across the nation and doing all kinds of amazing things. I'm actually very keenly interested. As Sanjay said, we are actually supporting many of them, especially those who are doing things which have a positive impact on society.
How different is the access of capital now versus 30 years back when you were perhaps getting your feet established in the business?
Certainly very different. It's not just that there is more access, there is more variety of funding instruments available. You can create many layers under which you can actually take debt, and some companies have done that. To an extent, it's beneficial, but beyond a point, I think it's very dangerous because it lulls you into a sense of comfort without realizing you take debt in entities which have no cash flows, which don't have revenues. And banks were, by the way, and banks and NBFCs were happy to give that money. But at the end of the day, you need a source for servicing and repayment. So in our case, if we do take, we by the way, we don't never take debt, but we hardly ever take debt. When we do take debt, we want to ensure, even more than the banks giving us the money, that we have the ability to not just service it, but to pay it many times over.
In a move to reduce greenhouse gas emissions from vehicles, Union Road Transport and Highways Minister Nitin Gadkari announced that the government has issued an advisory to the auto industry to start manufacturing flex fuel engines in 6 months' time. Nitin Gadkari also said in a tweet that flex fuel vehicles are capable to run on a combination of 100% petrol or 100% bioethanol and their blends. And in other corporate news, IndusInd Bank has become the first Indian bank to go live on UPI for cross-border payments and NRI remittances. The bank has joined hands with the National Payments Corporation of India for offering cross-border remittances to Indians using UPI IDs. E-cycle arm of Hero Cycles, Hero Electro, announces the launch of its 2 electric mountain bikes, F2i and F3i. The bikes will be rolled out at a price of 39,999 rupees and 40,999 rupees. The F2i and F3i are India's first connected e-cycles in the MTB category. JSW has become the first Indian corporate house to launch an EV policy for its workforce. Their employees will be given up to 3 lakh rupees incentive for purchase of electric vehicles. Free charging stations and parking slots in JSW offices and plant locations will also be provided. Before we end the show, take a look at Tata Sons chairman N. Chandra's annual address to employees. He said, most important milestone this year was winning the bid for Air India. Proud of how Tata Group responded to the pandemic this year. Digital, new energy, supply chain and health are 4 themes. Take booster shots when they become available for yourselves and your families. We can play our part in making India a $3 trillion economy by 2024. And that's where we leave it on the show today. Thanks so much for watching.